My name is Thomas LEDFORD, aka Taxman 88. I'm here to share this video a conversation concerning Publication 501, 503, 525, and 596. And these are a few of the publications that I take my actual clients through who looking to start their own tax preparation business, who don't have the knowledge and skills already when it comes to providing the service of having a tax preparation business. Is what I help do. So through my mentorship and coaching program, which is designed to help individuals start their own tax preparation business from scratch, from A to Z, no matter where you're at in your journey. I work with people who have prior knowledge and skills already, and I work with people who have no prior knowledge and skills whatsoever, who chose the business model of tax preparation to embark on. And so that's what I help do. And I allow them to leverage my 19 years of experience, 13 as a business owner, by guiding them through a process that helps them to set up their tax preparation business, as well as teach them the tax preparation skills needed to start making money for the upcoming 2020 season, which starts in January of 2021. So this publication here deals with dependents, standard deductions, filing information. And so in this publication, my students will learn the 5 tests to determine a qualifying child. They'll learn the 5 filing statuses and amounts that go with it. They'll learn other information like you'll get a client who will ask you what's the requirements when it comes to filing a tax return. And so we have a chart in the book that covers that. And so when it comes to certain knowledge, and this is a little table we use for most taxpayers to let them know if they're required to file a return or not. So for people who file a single who are under 65, if they make less than $12,200, they're not required to. If they file a single and they're over 65 and they make less than $13,850, then they're not required to. The next one is head of household under 65. If they generate $18,350 or less, they're not required to. If they 65 and over file a head of household and they generate $20,000 or less, they don't have to file. Married filing joint with couples, both spouse under 65. If they generate less than $24,400, they don't have to. If they're over 65, they both over 65 and they generate less than $27,000, they don't have to. Married filing separately, any age and $5 income or more, they must file a return. And qualifying widows under 65, if they generate less than $24,400, they don't have to. And if they're over 65 and then they generate less than $25,700, they don't have to. So this is the chart we use to help people determine if they're required to file a return or not. Scrolling down through this actual publication, we got here the filing statuses. We have them single, we got married filing jointly, married filing separately, head of household, and qualified widow. So I let my students know you don't have to learn these in order, you just need to learn them. And so these are the things that's covered in the publication. When it comes to being head of household, it's not about having children only. It's about having dependents, of course, is one of the main qualifiers, but on top of that, it deals with income as well. And so as long as you provide 50% of the cost of keeping up where you live at, you qualify to use the head of household status, and that's what taxpayers don't understand. Regular people who file tax returns don't understand. All because you have children don't make you head of household for filing purposes. And so we have requirements that we go by to determine that. And so part of that requirement is dealing with how much money you make, and is the money sufficient to where you provide 50% or more of the cost of keeping up where you live at. And so that's the simple qualifications we go by. And so this is a cost of keeping up your home worksheet that you can use to help you determine if you qualify for that, if you're not sure, or if you have any doubt. And then from there, we scroll down, and we go, and we scroll down, we scroll down, we scroll down. Qualifying child, we have 5 tests: relationship, age, residency, support, and joint return. Now, relationship is first because that's the most important part of the 5 tests. If you don't meet the relationship test, the other 4 don't mean anything. And that's how it really goes. Number 2 is age, how old the person is. Residency, did the person live with you 6 months or more in your home, based on relationship. Support, did the person provide more than 50% of their own support or less is a key. Joint return meaning is the person married to someone and someone else is looking to file one of the taxpayers on their tax return. And one of the simple examples I can give you is where you have a daughter who's 19, she's in school, and her parents can still claim on their tax return, and she got married to a guy that's 22. He's in college as well, and they both worked, but they not required to file a return. And so under those conditions, her parent can still claim her, and his parents can still claim him, and they can still file their own tax return because, number one, they're not required to. And the only reason they file a tax return is to get any federal or state withholdings that was taken out of their return back. And so that's how that works. And so these are some of the basic knowledge that my clients need to learn out of Publication 501. The next publication is 503, Child and Dependent Care Expense. And this is basically for people who go to work, they have children that may not qualify for school, where they need someone to watch them while they're at work. So it's either going to be a child care center, daycare center, or someone that you trust enough for the individual that's going to watch your child while you go to work. And so you qualify for this credit on your tax return. And so that's what this publication helps you to understand. So if you have one child, when it comes to determining what your credit going to be like, we use $3,000 or your actual expense. So if your actual expense for one child in a daycare center while you had to go to work was say $6,000 for the year, well, when it comes to calculating your credit, the IRS is going to use $3,000 of that. If you have two children that's being watched while you're at work, and say it costs you $8,500 for the year, then the IRS is going to use $6,000 to calculate your credit. If you have more than two kids that's being taken care of while you go to work, then anything past two, they don't count. You don't get credit for only two. So if you have 3 or 4 kids being watched by somebody, oh well, that's just the price of doing business so you can go to work. But the IRS going to count 2 of those kids. They're going to use the $6,000 formula for that, because that's the most they're going to use to calculate that credit in that situation, and that's how to determine what your credit will be for child care expenses. The next one would be Publication 596 is Earned Income Credit. And this credit here is for people who work or are self-employed who have children who made under a certain dollar amount who qualify for earned income tax credit. And so Rule 1 covers those requirements. It gives you the income levels. So they start off with 3 children and being married. So a married couple with 3 kids, if they made less than $55,952, they would receive some type of earned income credit. If they were single or had a household with 3 kids and made less than $50,162, they would receive some type of earned income tax credit. The next level is for 2 children. A married couple with 2 children making less than $52,493 will receive some type of earned income tax credit. A single or head of household person with 2 kids making less than $46,703 will receive some type of earned income tax credit. And then the next one is a person with 1 child. So a married couple with 1 child who made less than $46,884 will receive some type of earned income tax credit. And a single or head of household person with 1 child who made less than $41,094 will receive some type of earned income tax credit. And for people who have no children who happen to be married, who make less than $21,370 will receive some type of earned income tax credit. And for people who are who's single with no children who make less than $15,570 will receive some type of income tax credit. So that's how you determine the income levels. It's Rule 1, adjusted gross income. Those are the limits that determine if you qualify based on filing status and having children, and how much you must make as far as income to qualify for that. And so Rule 2 says you must have a valid Social Security number. So a lot of people born in the U.S. definitely got a valid Social Security number, and so we definitely know that for sure. The next thing is 3, your filing status cannot be married filed separately. So married filed separately is one of the worst filing statuses out of the 5 that you can use for tax purposes. Rule 4 says you must be a U.S. citizen or a resident alien all year. So if you don't fall into the category of being a definite citizen, you must be a resident alien all year to qualify for earned income tax credit. Number 5, you cannot file Form 2555. Because Form 2455 is income. It's called income earned in foreign countries. So you got people working in foreign countries who can exclude some of their income from their tax return. But for the most part, if they got the 2555 at all as part of the tax return, they won't qualify for earned income tax credit. Rule 6 says your investment income must be less than $3,600. So for people who got investment income, if they income is less than $3,600, you'll get some type of earned income tax credit, which won't be much, but it'll be something for people who fall into that category. Rule 7, you must have earned income. So like I said, if you work a job or if you're self-employed, you would get some type of earned income tax credit. That's part of out of the 15 rules, that's one of them, you know what I'm saying? And so, like I said, I'm not going through every last one. And so those, some of the overviews. And then the next publication is taxable and non-taxable income, publication 525. So basically, I give them some publications in the beginning to get started with that they want to learn, because these are the most common things they're going to run into when it comes to individual income taxes and the clients that they're going to have during tax season. And so this is the information I give them. So this publication points out different types of income that's taxable or non-taxable. And so these are the things I give my students that they need to have and learn and study. And so 2 days a week we go live training to make sure that the information that they study and they interpreting it right, they understanding it correctly, they're getting it. And so we want to make sure as each week progresses, they're constantly learning, they're constantly getting what I'm trying to teach them. So when tax season rolls around, they'll be well prepared to go out and service clients for the upcoming 2020 season, which starts in January of 2021. Just a quick footnote today, they just found out that the PTIN renewal process, the IRS has implemented a fee again for a good, 3 to 5 years. They took away the fee and now they brought one back. So it's $35.95 to renew your PTIN. And the PTIN is the number we need to have when we getting paid to do income taxes. So if you work for a tax firm, that's a mandatory situation you must have to even get hired with the tax firm. They're not going to hire you if you don't have a PTIN. And so that situation is about us now, where we can renew our PTIN, pay the $35.95 for the upcoming tax season, and we all good to go. They'll send you the PTIN letter securely through your account within 24 hours from the day you submit your application. So if you do it on the weekend, then you basically have to wait till the next business day, which would be a Monday or Tuesday, where you'll log back into your account, go to mail, and you'll have your PTIN letter where you can print that out, because your employer would definitely want to have that inside their file to make sure that you have a valid and active PTIN for the upcoming tax season. And so those are the 4 publications I've done an overview on: 501, 503, 525, and 596. And if you haven't subscribed to my channel, please subscribe. Hit the bell for notification every time I go live or do a video, you'll be notified. Also, I have a link in all my videos where you can join my email list and follow me on my journey to check me out on a much closer level. And all my products and services for people who are on my email list will get 20 to 50% off anything I'm promoting throughout the year. And so if I'm not promoting anything at all, but you're part of my email list, you will get a special promotion offer through your email for the things I have going on inside my business that you may be interested in. And so, again, this awesome industry of tax preparation and taxation, if you're looking to start your own tax preparation business, you can leverage my mentorship and coaching program, which is an 18-month membership. The price is $1,997 6 monthly payments of $350. I'm doing a special right now, which lasts until tomorrow, where you can get in at $1,299 or 4 monthly payments of $325 for the 18-month membership program. And on top of that, I'm letting you leverage my software and my infrastructure for us being a virtual tax office for the upcoming tax season, where you don't have to purchase anything additional on top of what you should hopefully already have already. So if you already got a laptop or a desktop, you already got a printer, those are the main two equipment pieces you need, along with your phone, to be able to do business with people virtually, as well as in your own local state where you may live at. And so if you want to learn more about the special I got going on, I have another one that's a 12-week special, and it ends tomorrow as well, where you get 12 weeks to work with me. I get to walk you through setting up your own tax preparation business, and as a bonus, you get additional 8 weeks of support during actual tax season to help you with the support you're going to definitely need to be in a new business owner and being able to service clients during actual tax season. And so the second bonus that I give comes to people, it only comes for people who paid the one-time payment of $799, where you will receive my actual business, my actual infrastructure when it comes to access to the software, access to the tools and resources that I use to do business virtually. That's a bonus you'll get for the 12-week program if you make the one-time payment of $799. And so I'll see you in my next video.